let us move ahead and have a story. We have one person over here, Vaishnavi. We have then another person, Bhuma. We have yet another person, Anudeep. And we have on the other side yet another person, Mr. NJ. So, 4 people appearing on the screen. Let me explain first of all who are these people. So, Mr. NJ in the left side is basically supplier of a product who is making sales on credit, and these 3 people standing on the right are the customers of Mr. NJ. These are the customers of Mr. NJ, and these are basically customers who have been troubling Mr. NJ that they are not making the payments on time. Now gets into entry the most important character in this story, that is Girish. And Girish comes and simply asks Mr. NJ that, dear NJ sir, how may I help you? And the response is, Girish, can you please collect money from my debtors after 3 months, because today only I have made sales. My past experience with these people, they generally don't pay on time. I want you to please make the collection for me. You go and make the collection from these 3 people. He says, sure sir, but what's there for me? Now, the real story begins now, right? That someone is being appointed by the supplier. Someone is being appointed by the supplier for making collection from the debtors, and that someone is ready to do collection for the company, but that someone is asking a fundamental question that I will do this, I will provide this service to you, but what's there for me? What's benefit that I'll be getting? That's the question Mr. Girish is asking over here. So you tell me one thing, isn't it a rightful thing that someone cannot be just rendering any kind of service free of cost? Someone should be getting some benefit. So I would say, that is Mr. NJ would say, that Girish, don't worry, from all the money that you collect, some percentage of commission I will give to you. Some percentage of commission I will give to you. Now friends, let me tell you, this kind of arrangement in the field of financing is termed as factoring. So I'll be explaining you in details what is factoring and how it is effected. But from this short story, you could have got one small basic understanding that there is a company making sale of goods. There are customers who are buying goods on credit, and there is a third party getting involved, which is an agent to the company. This agent, so in this example, Girish is that agent. Those 3 people standing on the right in the earlier screen were the customers who have purchased goods on credit, and Mr. NJ is the supplier of goods. So basically 3 parties are getting involved in a factoring arrangement. The company, that is the supplier, customers who are purchasing goods on credit, and the third party who is basically an agent appointed by the company. That agent is known as a factor. That agent is known as a factor. What is the role of this agent? What is the role or responsibility of this factor? On behalf of the company, the agent, the factor, will go and collect money from these customers, that is these debtors, and hand over the money to the company, and definitely charge a fees for providing this service, definitely charge some commission for doing this job. Now, what is the advantage of appointing a factor like this? What is the advantage? Just imagine, suppose Mr. NJ has 100 customers and only 3 of them are purchasing goods on credit. 97 customers are purchasing goods for cash. So it does not fit the situation that Mr. NJ should have a credit collection department in his company just for 3 customers, right? There is something called outsourcing. Outsourcing means asking an outside party to provide some services to you. So if I have my own credit collection department, what will happen? I'll have to pay them monthly salaries and incur recurring expenses unnecessarily. Every month I have to pay to this kind of staff of mine, and I will not be having proper utilization of the resources. Instead, why don't I appoint a factor who would do this job and take some fees or commission, and this commission or fee is basically set as a percentage of the money collected. So the larger the amount you collect, the larger of fees you get, because it is linked as a percentage of the collection made by the factor. So who is the factor? Factor behaves like an agent, and the principal who is giving this assignment is the company supplying the goods. Now this factor, in a factoring arrangement, this factor is basically an outside party who is ready to provide n number of services. Girish will come to me and tell me, sir, you want any other help? Do you want me to prepare invoices for these customers? Do you want me to deliver invoices to them? Do you want me to, provide you some money so that you can have sufficient working capital in hand? I said, this point I did not understand, Girish. Girish means factor in my example. So, Girish, I am not understanding what example or what Girish, I am not understanding what offer you are putting up. Now Girish tells me that, sir, see what is happening when you are selling goods on credit. No, when you are selling goods on credit, your money is getting blocked. I will collect it for you, but I will collect it only when the due date comes, that is after 3 months. So till 3 months your money has got blocked, sir. Now, sir, let me do one thing. Let me give you some money in advance so that you can utilize that money and you can somehow manage your working capital requirements. So I am ready to provide you some advance money, but sir, for that also I will charge some interest. Now, factor is ready to provide n number of services, but whatever service or whatever benefit the factor is providing, that benefit will not come to me free of cost. The benefit will always have some component of cost. So let us do one thing. Let me first of all go into little more details of this factoring arrangement. So let us move ahead and now talk about the concept of factoring in details. Please carefully observe whatever you are finding on screen. So one side we have the firm which is making sales, and then we have lots of customers, and the firm is making credit sales to these customers. Now company needs to collect money from these customers. So are you understanding the position by far? The firm or the company is making credit sales to the customers, and now it has a need to collect the money. One alternative could be to have their own collection department, but another alternative could be appointing an agent or a factor. That means outsourcing the collection requirement. I hope you people understand the meaning of the word outsourcing. When your job, when your work you don't do yourself and ask some outside party to do it for you, that is called outsourcing. So this firm is appointing an agent which is known as a factor, and this factor agrees to make collection on behalf of the firm for a fee. That means the factor will not be making collection free of cost. The factor will charge a fee. The factor also provides advance to the firm at an agreed interest rate. So now the factor is providing advance to the firm. If the firm agrees for that arrangement also, factor will definitely allow this firm to have an advance money, and of course the factor will be charging interest on that. Now This will happen at the beginning of the cycle. So what has happened at the beginning of the cycle? Suppose credit period is 3 months, then at the initial stage the firm has made sales, appointed the factor, and the firm has also taken advance money from the factor. Just imagine what will happen after the due date has arrived after 3 months. The factor will make collection by the due date, and then what will happen? The collection that is made by the factor, from that the factor is going to deduct their fee towards the collection task, right? And will also deduct interest on the fund that was advanced, and will also deduct the principal amount of the fund advanced, and the net balance which is arrived at will be a final payment, and that final payment will be made by the factor to the firm by the end of the cycle. Let us move ahead and write some notes over here. Factoring is an arrangement where a firm appoints an agent known as factor who would collect the outstanding balances from the debtors of the firm against a fee. The factor may also advance money to the firm at an agreed interest rate and will earn interest on the amount advanced. Generally, the factor will maintain a margin or a reserve while advancing the money to the firm. Let us move ahead and continue writing further. Types of factoring. So there are typically two types of factoring: non-recourse factoring and recourse factoring. Under a non-recourse factoring, any loss arising from bad debts will be borne by the factor. That means if it is a non-recourse factoring and bad debts arise, then company will not bear the loss of bad debt, but the factor will bear the loss of bad debt. Under a recourse factoring, bad debts losses are borne by the firm itself. So can you guess one thing? Under which type of factoring the factor will charge higher rate of commission? Use your common sense. Use your common sense. Under first one or second one? So obvious answer will be under the first one, that is under non-recourse factoring. So that line also you should write. Generally, the commission rate is higher in a non-recourse arrangement. Now let me explain something about this recourse and non-recourse factoring. So if you can understand, I am giving responsibility of collection to the factor, okay, and factor is supposed to make collections from my debtors and pass it on to me. So it is my money collected by my factor and passed on to me. Of course, the factor in exchange is taking some fees or commission. What if bad debts arise? This could be a fundamental question when I was negotiating the terms with the factor. When I was having an arrangement with the factor on the table, we ended up discussing one very crucial point, that what will happen if bad debts arise. So generally this point will be put forward by the factor. The factor will tell me, sir, what if there is bad debt arising? I will convey to the factor, don't worry, my debtors are generally all good debtors, they will not create bad debts, but still if it happens, you don't worry, I will look into this. When I say you don't worry, I will look into this, means I am taking responsibility of bad debts. This is called recourse factoring. Recourse factoring means recourse means an alternate course is available. So ultimately, if you look into, the collection responsibility was given to the factor, correct? If factor could not collect, is there an alternate way? Is there an alternate course? I am telling the factor, don't worry, there will be a recourse, there will be an alternate course. If they don't pay money to you, I will not ask you to pay the money, I will recover from them. That means I am conveying that there is an alternate course available, there is a recourse available. However, if I ask the factor that, boss, I have given you the collection responsibility, every penny you have to collect from the debtor. If you cannot collect, I will not be concerned with that. It is your problem, it is your loss. For example, if my debtor's balance is 5 lakhs and I have asked the factor to collect 5 lakhs under a condition that if you collect 4,99,000 also, then that 1,000 rupees you pay from your pocket to me, I should be getting entire amount of 5 lakhs. In that case, I am not allowing the factor to have an alternate course. I am not allowing the factor to have a recourse. Then the factoring arrangement is called non-recourse factoring. Under a non-recourse factoring, if there is any bad debt that is arising, it will be the responsibility, it will be the burden, it will be the loss to the factor. If it is a recourse factoring, the loss comes upon the company. So generally, under a non-recourse arrangement, the factor will charge a little higher percentage of commission or little higher amount of fee, because the factor is taking risk over there. So factor takes the risk of bad debts under non-recourse factoring, whereas the company itself takes the risk of bad debts under a recourse arrangement. So I am sure you are clear with the meaning of the word recourse and non-recourse, and you have also written down the entire flow of the transactions that will happen in a factoring arrangement.